Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Monday, the 19th of November, 2018. And we're just after 4:07 p.m. Central Daylight Time. A down day in all stock indices. Gold and some of the other metals got a bid. The dollar still weaker. Bonds and notes ever so slightly higher, but the yield on the 10-year down to just about 3.06. So we're no longer talking that 3.25. Are we going through there? So on and so forth. Now, this was a big day down on a Monday, and I question if we're not going to get the Tuesday reversal day that is so often with that, especially going into a holiday week where the markets are not open on Thursday. Keep that in the back of your mind. Then we're open on Friday, but it's a half day in most markets. So it's a funny end of this week. So just be ready for that. Let's go to the charts. Is the market going to come back and challenge the most recent lows that we made in October? Or is the market going to be able to fight that off and start up? I now think that if you can get in and over this 2818 level, and from where we're at right now, that's about 130 points, 120 points away. What that would do is set you in for that end of the year rally. I have serious doubts that you're going back for the highs at this point. I don't know if you will, period. But what I'm seeing right now is that. Certainly one of the things that would get you going, and I think you realize that, is that if the president, our President Trump and President Xi, were to make a real effort to end this trade war that we have, say something very good at the G20 meeting at month end, that would be a positive. We saw the opposite at the APEC meeting over the weekend, where Vice President Pence was quite aggressive with China, saying that they have not done what they want and that the articles that they gave them aren't enough. We'll see what goes on from there. When you take a look at Fibonacci studies, you can see from this high, the 2960 area down to 2606, you've started to hang around the 1/3 retracement level. Now, in one shot, we got up to that 2/3 area, fell back, and we seem to be finding a home hitting that almost on a daily basis. We'll see if that means anything or if the market decides to crater through these lows and challenge down here. You're at a very interesting time in this market. I'm going to come back and repeat a statement. Now, if you take out the swing line high of 2748.75 and don't take out 2671 and a quarter, the odds favor you'll immediately turn into higher lows, higher highs in the market. And notice where the 18-day average is. That would be over it. It would likely put you into an area to challenge the 200-day moving average of closes at 2768.70. If you took that out, the trade would start saying, the market might have overdone the break in the market. Not saying that'll happen. I'm saying what it would have to do to be friendly. Assuming you take out 2671.75, let's flip the other way. The next number for support is the Bollinger Band, which is over these lows and likely to climb a little bit tonight, but it's around the 2640 level. As you take a look at momentum, it's pointing down. So what do we have? We have a downtrend. Let's understand that. You've got lower highs, certainly lower lows. Momentum is down, and because you're under the 18-day average, bias is down. Once again, the market is challenging where it closed on December 29th, 2017. In the NASDAQ, you've never have made it through these lows, but this is the deepest reach we've had since back here. Will the market challenge the closing price way down over here? Don't know. We know the FANG stocks are in trouble. Tech is what's leading a big part of this marketplace down. We had an outside day down today that stopped at the 18-day average, that line in the sand, as I often say, and notice the Bollinger Band, where I teach you in these videos that that's often a zone where the pros take money off the table. Both occurred today. You'd have to take out today's high on either Tuesday or Wednesday for me to call this a bear trap. Barring that, you're in a downtrend that is oversold, that has hit a downside target. In the Dow Industrials, is the market on line to challenge again that close on December 29th? Certainly could be. If we look at the market here, we're not in oversold condition. The trend is down with lower highs, lower lows, support theoretically that closing price the market had. If you were to take out the highs of 25,505. That would be a sign, without taking out this 24,782, you could end up with higher lows, higher highs. Then, of course, the 100-day average becomes the first key resistance point. A difficult market, but bearish. We don't have anything bullish to argue about there. I'm giving you the what ifs, not saying they're going to happen. The Russell threw out bearish signals again. Obviously an outside day down. We also have a market that's challenging the previous break low. You are in this market oversold territory. Any reading under 30 is oversold the way I define it. If you were to take out today's high on Tuesday or Wednesday, I would define that as a bear trap in the market. Barring that, the resistance point is that 1528, the 18-day average of closes, and downside target, because you're under, by the way, the close of 2017, could be the lower Bollinger Band. But even if you hit that, you don't take out those lower lows. I'm not saying you couldn't do that. I'm just saying you wouldn't have done that. In the VIX, one of the things that keeps bugging me on this break is people aren't going into the protection area. You had a rally high here in October on that monster break. On the secondary break, you retested, didn't take out that high, and you didn't take it out here. It's just a warning sign. And where's the market? It's still having trouble closing over that line in the sand, the 18-day average of closes. You have a higher trend because you got higher highs and higher lows, but it's negated because you keep closing under the 18-day average, even though momentum is pointing up. In T-bonds, it seems to me we're trying to hit the upper Bollinger Band. You're in overbought territory. I am expecting profit taking if you hit that number. So we're in a zone where that's what I'm looking for. And I say that because you still have a pattern of a higher high, lower low, and you're overbought. In the 10-year note, you're stretching for that upper Bollinger Band. That number is 1912. Guess what today you hit? 1912 is the high. The market settled off at 1909.5. It has hit its upper targets. I will not be surprised to see prices fall back to at least the 100-day average, if not a bit lower. It is overbought and not trying to embed. In TLT, the popular ETF, you've got a pattern of higher lows, higher highs. You are overbought. If you reach up, I'd look for resistance at the upper Bollinger Band. But because you're so overbought, at any point this thing can give ground and pull back to the 18-day average of closes to rethink itself. In the dollar index, you're in a downtrend. Now, is this a major top is what I'm starting to ask myself. You've got lower highs, lower lows. That part of it's bearish. You're under the 18-day average. That's bearish. And momentum is pointing down. That is bearish. If it can get its legs to go further down, 95.67 is a possible target. And on the way up, resistance, the 18-day average around 96.49. In the eurocurrency, this is a trendless market. This is just a big bounce off of that 112.45.5. You still have Brexit in front of you. You still have the Italian situation in front of you. But you're getting a heck of a rally. You've had 200 points in this rally. I would assume that if you get up towards that upper Bollinger Band, you will run into resistance. What you have to ask yourself is, how much more influence will Brexit and Italy have on this market? And it can still be substantial. In the British pound, the trend is down. Lower highs, lower lows, attempting a bounce. The market, if we look at the momentum, both numbers are still over 30. Therefore, you're not in oversold territory. If the market extends down, 126.95, a potential target. If the market rallies, I would expect to see sellers in the 129.40 zone. But you got to remember, each day you wake up in this Brexit situation, it's a whole different world in this market. In the Japanese yen, the short covering rally that began as you crossed this high right back here at the 80.22 area has continued on. The market is up now to 80, what is that? It was 88.22. If I said 80, I'm sorry, 88.22. You're now up from there about 100 points rough. Well, 80 points, 89.03 and a half. You are entering very close to when you reopen. You'll probably be in overbought territory. I don't know if it has the momentum to go up here. It would if the market sees another crash in the stock market potentially tomorrow. I don't know that that's in the cards, but there's no reason to be short. Is it overbought? Yes. Support back at the 18-day average of closes. Bitcoin had a 2-day breakdown, if you'll recall, right here, and I said that's confirmation of the breakout of this sideways action. All you did is the other day rally back on Friday to the lower Bollinger Band, and you cratered again. There's no telling how low this market wants to go. It's truly an uncharted territory. It keeps getting rulings against it that these people that have rolled out these ICOs think that those weren't securities. I started laughing. I mean, I've been around this 5 years. It's a security. You take people's money in, it's a security, and the SEC doesn't send out warning letters. They come down on you, and they did on 2 firms over last week. Here's something interesting. For the first time in a while, we're back underneath that 18-day average in the Brent versus WTI oil. We seem to get over it, get back under it. It's just back and forth. The spread now is 9.78. We're seeing that anything in that 10.25 area is a bit rich. When we take a look at the current prices, here's what I'm waiting on as a chartist. I don't care about any of this. I care about if you're going to lose the embedded reading in the Brent, WTI, rebarb, gas. Not natural gas, rebarb. If and when you lose those readings, I think the market stands a heck of a shot at rallying back for their 18-day average of closes. Until then, this takes over the leadership on the chart for a chartist like me. And that is the number that I'm looking at. That's all I care about. If that occurs, we might get what's called a relief rally. Could it be a bottom? It could. We'll have to see how that plays out. In the gasoline, this is a market that is in its own awkward way just hugging the Bollinger Band as it keeps working itself higher off this unusual cold weather for this time of November. I'm telling you, we had snowflakes in Chicago size 1/4 over the weekend. I couldn't believe how big they were. We did not get the accumulation here, but they get it further down south and so on. But the cold is here. This is more like January than it is in the month of November, and yet we're going to go back up towards 50 degrees this week. We're going to be near 50 for Thanksgiving. So just give you an idea how awkward the weather is, but it's put all those heating days into play, and those heating days sap natural gas. That's what they're about. I write about this and a lot more in my newsletters. And what I do in my newsletter is, like, I've already written 2/3 of it for tomorrow. I'm now writing about and telling you what to expect in the morning, housing numbers, trying to set you up for what the rest of the day holds, the events of the day. I've already covered the USDA crop progress report, how the harvest is going. I'm talking about energy production. I've done tonight a whole write-up on OPEC, on oil prices, what to expect out of the December 6th meeting. If you don't get those type of things from your brokers, maybe you should look at us. That's just my research. Then we have Linn Associates research to try us out, and we'd like you to do it. Give us a call, go to our website, sign up for the free, I'm going to repeat that, free trial to what we have, and you can click up here to do that as well. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.